Hey, so this episode is all about how to make profit. And in particular, I'm going to show you my profit formula method. This is a method that once you learn it, it's going to serve you for life. You'll never not be able to see what your next right move is in business. Hello and welcome to the Profit and Cashflow Mastery podcast. I'm your host, Gavin Smith from The Profit Analyst. And in this podcast, I'm going to be showing you how simple, easy, and more important, how practical numbers can actually be for you as a small business owner. I have a pretty extensive finance career and background, but more importantly and more relevant to you is I'm a small business owner myself. I've built multiple businesses from startups and turnarounds through to 7 and even 8-figure plus businesses. And what I've learned along that journey is how to make numbers really simple and easy and practical and how to use them to guide you in your business strategies. And ultimately, that's what I now love doing. I love teaching other business owners how to make the numbers simple and easy so they can gain real clarity about their numbers. I love showing them how to identify what numbers actually matter in your business. But more importantly, I show you how to use your numbers so that you can make better decisions, which ultimately leads to better profitability, better cash flow, and growing and scaling businesses. So let's dive into it. Okay, so today we're going to focus on how to make profit. Just a reminder, when it comes to knowing the numbers side of your business, profit is only one of the key elements we need to understand. We've got 3 different types of numbers. We've got the P&L or profitability, which is really telling us how well is the money-making machine doing at making money. We've got the balance sheet, which is all about your financial position. What does my business own? What does it owe? How am I positioned financially? And then we have our cash flow, which is talking about cash, like the actual timing of cash coming in or out of your business. These 3 sets of numbers are very different from each other. And there's many different scenarios that I see where a business is actually really strong in its financial position, but it could actually be making a loss. Or sometimes I see it the other way around. I see businesses which are doing great, making a good profit, but when we go and look at their financial position, they're really underwater. They owe so many people lots of money, they owe lots of debt. These numbers are very different from each other, and it's really important that you look at them in isolation, even though they relate to each other, but you need to kind of look at them in isolation to be able to work out the strategies or the plans for them. The final point here is just the difference between profit and cash flow. If you ever need a reminder that these are different numbers and they're very important to understand, is when we look at the failure rates of business statistics, we see that 60% of the businesses that failed are actually profitable on paper, but it was cash flow reasons, the reasons they failed. They couldn't pay suppliers on time, they couldn't pay team on time, and this is what undid them, even though they were making profit. So again, these are different sets of numbers, very important to understand in isolation, as well as how they all fit together. But today, specifically, I really want to focus on how to make profit. Now, the first thing when it comes to making profit is you need to realize that profit is just the outcome. You can't just go and make profit. It doesn't work like that. Profit is the outcome of when you manage the 2 things in front of it really well. So think about profit as a really basic formula, which is the income minus the expenses. Income minus expenses equals profit. The 2 things that you can control and manage as a business owner is the income, what sales you're making, what's coming in, and where you're spending that money, what expenses you're incurring. And obviously it's when you have more income, less expenses, that you're making a profit. And at a really basic level, knowing that simple formula, if you want to make more profit, you just need to either have higher income or lower expenses. One of those 2 options will result in more profit for your business. That's great in like a simple textbook formula, more income, less expenses equals profit. But we want to be able to connect that through to the real world. What's actually going on in your business and what strategies do you have that you can employ to be able to increase that profit at any point in time? My favorite method for people to understand this simple formula is let's take this really basic profit formula logic, income minus expenses, but let's go a couple of layers deeper. In particular, we want to go 2 layers deeper, and I'll talk you through it. The first layer deeper is where we just go down to the next row down and we break income into 2 elements and we break expenses into 2 different elements. So now we're dealing with 4 different numbers which result in profit. So at a really basic level, we can split income into price, i.e. what are you charging for your goods and services, and we can break it into volume. How many customers are you seeing? How many transactions are you doing? How many members do you have in your business? How many deals are you doing? How many houses are you doing? It depends what business and industry you're in, but it doesn't matter what business you're in, we can break your income into 2 separate numbers, pricing and volume. And it's obviously the prices you're charging multiplied by the number of customers you have or clients or whatever your metric is for volume. Price times volume equals income. So now all of a sudden, we go back to that basic profit formula where we want to increase income or decrease expenses. If we focus on the income side, we've actually got 2 options here. We can either charge higher prices or we can see more customers. And all of a sudden, this is starting to get a bit more into the real world for us. We can see some of the real world levers we can play with. Let's take a look at the expenses for a second. Again, we want to break that expense number into 2 different options. We want to take all the expenses that you're incurring in your business and split them into 2 different categories. The first category is what we call variable costs. These are costs which are going to increase or decrease in proportion to what's going on with the income. For example, if you run a restaurant and you double the sales, you're going to have to double the amount of food and drinks you're purchasing to sell. If you're a building company and you double the number of houses you're building, you're going to need to double the amount of bricks and wood and everything else that you need to buy to be able to sell. These are what we call variable costs. So the typical things here are the cost of goods sold, because obviously the products and services, things you're buying to be able to sell. So these are going to move in proportion to income. The other type of expenses we have are what we refer to as fixed expenses. These are things that don't change regardless of how much income fluctuates. So the really obvious example here is typically the rent. So a business will rent a premises, and regardless of whether the business has a busy month or a quiet month, rent is going to be the same. These are what we call fixed costs. They don't change regardless of what's going on with the sales. So what we've done here, we've gone one layer deeper. We've taken our profit, which equals income minus expenses, and we've gone one layer deeper. We're seeing income splits into price and volume, and we're seeing expenses split into variable cost and fixed costs. Next episode, I'm going to focus more on these fixed and variable costs and why important to understand and how you can simply and easily identify them. But for now, let's see, we've got these 4 different levers. And now this as a starting point is a really great framework for you to learn, because I can go and pick up any set of financials and find which one of these 4 options is the easiest option straight away to play with to be able to get more profit. Do I put prices up? Do I get more customers? Do I focus on getting our proportionate cost to it? Or do we focus on just getting our fixed overheads down? Now, for me, this is where, if you've been listening to all my podcasts, there'll be a connection here from this episode to previous episodes. When we're looking at the profit formula, I actually love to go one layer deeper again. So we want to go 2 layers deeper here, where we actually end up with having 7 different numbers to play with when it comes to working out the profit for your business. Why these 7 numbers? It's these exact 7 numbers that I've talked about previously that relate back to how I look at financial statements, how I look at a P&L and what I call a simplified P&L. When I break the expenses down into those 5 business driver cost categories, this is the reason why. So again, let's go the next layer down. From the income side, we're still dealing with the same 2 numbers, price and volume, that drive our income. But then when we're looking at our expenses, we want to break those expenses into the 5 different categories. The same 5 categories I've talked about in a previous episode, what I call the business drivers. So these 5 categories are the cost of goods sold, the direct product and services we're buying to sell. Second category is our team. So anything related to team costs, wages, salaries, the contractors, the workers cover insurance, the superannuation or pensions, whatever it is that's related to team, group that together. Third group of costs here is our marketing and growth investments. Or what are we reinvesting to grow the business? How much are we spending on marketing? How much are we spending on coaching? All that kind of stuff, the investment or growth bucket. Number 4 is our property. If you're renting a premises or you own a place and you're paying expenses on it, we want to group that together. And finally, number 5 is what I refer to as the overheads. And this is really just the catch-all bucket. If something doesn't fit into cost of sales, team, marketing, property, it goes into the final bucket, which is the overheads bucket at the end there. Once we've got to this layer, we've gone 2 layers deeper. We're now dealing with these 7 numbers, okay? So profit, based on this formula, is the income is the price times the volume. And then when we look at the expenses, we have 5 numbers: cost of sales, team, marketing, property, and overheads. And it's these 5 numbers which enable us to be able to look at your business and spot where the opportunity is. Which one of these 7 numbers is the easiest one for you to push or pull or increase or decrease, which is going to have a direct result in increasing the profitability for your business. You can look at each one of these numbers like a little fulcrum or leverage point within your business. And we're basically looking at the numbers and trying to identify which one of these numbers do I need to put the least amount of effort into, be that investments or my time and effort, which is going to result in the biggest amount of change to the profit. And this enables you to really spend your time and effort in the best place possible for your business so that you can basically put in the least amount of effort to get the most amount of leveraged increase in your profitability. Okay, so we've got these 7 different numbers. And again, I've spoken about why it's these specific numbers or categories. And the reason why is because in real world terms, when you're running your business, there's different things that you do to pursue each one of these different numbers to be able to improve it from a profitability perspective. Now, on this next page here, if you're watching online, you can see the different strategies that fall under each one of these 7 numbers. So again, I'll just remind you across the top of the page here, the 7 numbers. Numbers 1 and 2 are price and volume, and the volume. And remember, just volume for you and your business is just related to whatever your business is. If you're like a gym or something like that, it's going to be members. If you're a builder, it's going to be number of builds you're doing. If you're a cafe or restaurant, it's like how many transactions do you do a day? It'll be different for you in whatever industry you're in, but it always comes back to some sort of volume metric. If you're a business owner who is struggling to see results, or you're overwhelmed by the numbers side of your business, we can help. Book in a call with one of my team members using the link in the description, and let's get your business thriving without the overwhelm. So we've got price and volume. And then our 5 different categories of costs are the cost of sales, 2 is team, 3 is the marketing and growth, 4 is property, and 5 is overheads. And what you can see under each one of these 7 different numbers is there are different real world business strategies to pursue. I'm not going to go too in depth on them all, but I'm just going to touch on them so that you can see the differences between the types of numbers or how we would manage them. So if we're talking about pricing, there's different strategies we can pursue about pricing. I'll do a whole other episode on this shortly. But when it comes to pricing, are you cost plus margin? Are you a value proposition where it doesn't matter what it costs you to make it, you get to sell it based on the value you're contributing to your clients? Are you market driven? Is your pricing really dictated by your competitors around you and what the market will accept? There's different strategies we can pursue to be able to make sure we're charging the right prices for our business. When we look at volume, there's a couple of different metrics here that I'd love to understand. I like to understand the marketing kind of metrics that are leading into the volume. So how big is your audience? How many people know you? What marketing you're doing? How many leads you're attracting? What are your sales conversion metrics like? If you're a membership type based business, what is your churn or repeat customer base like? And we also want to know when it comes to volume, what capacity could your business actually do? Based on the team and resources and everything that you've got already set up in your business, how many clients could you actually be seeing every month? Like, what is your volume metric for your business? Okay, let's go on to the expense sides now. When we're talking about the cost of sales, this one is really about knowing the data really well. Where am I spending the money? What are the top 10 products I'm buying? And it really helps to go a really macro view on this. Pull yourself high level. A couple of great examples here. I was working with some electricians down in Sydney, and we were looking at where they spend the money every month. What are the materials and stuff that they're buying? And obviously in their business, it was actually just basic cable was the number one thing they were buying. And it wasn't until we zoomed out and looked at it for a whole year that we realized, wow, these guys are buying $400,000 worth of cable a year. And they're buying it from like 4 different suppliers based on wherever they were for the jobs. And it's knowing the data that we have here where all of a sudden this is really empowering for them as the business owners, because they were able to go back to each of those 4 suppliers and say, hey, we have a $400,000 a year cable account. What's going to be your best price? And we'll buy all our cable exclusively from you. It's also in my own businesses, in the beach bars, we're looking at what are the recipes? Where are we buying stuff from? What's our wastage? There's so many different data points here around the specific cost of goods sold, where we're buying stuff and how we're buying it, about how we improve these numbers. When we're looking at team, a couple of questions that always come to mind here for me, or my 2 favorite questions are, do you have a high performing team? Rate yourself 1 to 10 in terms of do you have a high performing team in your business? Because you know as yourself, you can turn up engaged or disengaged or highly empowered on different days of the week. And your output can fluctuate 10, 20, even 30% just based on your energy and your mood as you are for the day. Think about that in the context of your team. If you're spending $1 million a year on wages for the team side of your business, depending on whether they're showing up 10% better or worse on a given daily basis, that wage bill could actually be $900,000 or $1.1 million, depending on how much effort they're putting in. And so when you ask the question, do I have a high performing team? If you're scoring yourself anything less than like an 8, there's real opportunity there to invest in like leadership type activities or better upskilling of your team so that you can get the most out of this part of your business when you're looking at the team number. And why I separate team from COGS is because the way we manage team and people is very different from the way we manage cost of sales and buying and data. Third category is marketing. This is all about what are we investing to grow the business? And we don't just want to throw money at marketing. We want to think strategically about where we're spending the money. Are we spending it on branding activities, marketing activities, sales conversion? Is it coaching? And the whole goal here, remember, with marketing is for business growth. So we're looking at understanding the volume metric at the front. Where could that be? And what do we want to invest in marketing to be able to grow that metric? Property is another one. Most people are locked into some kind of long-term lease and you can't really do anything about it. But what's really important here when it comes to property is understanding the maximum capacity or utilization that you can get out of that site. Because as you'll see in a minute when I talk fixed and variable costs in the next episode, really important to understand how high or how far you can stretch the utilization of that property before we need to look for another location. And then finally, overheads, that catch-all bucket. This can be filled with so many costs that it's a little bit overwhelming. My way of dealing with overheads is always to rank them higher spend to lower spend and focus on like that 80-20 rule. What are the couple of things we're spending at the top and making sure we're being efficient with those and there's not a lot of waste in there, and where we can again use our buying power to make sure we're keeping the overheads in check compared to the size of the business. Okay, so they got a little detailed there, but what I'm trying to make the link for you to see here is that when it comes to making profit in your business, it's not just a head down, do it and hope kind of scenario. We can actually come along and look at our profit as a basic formula, unpack our numbers, and through that, see exactly what's working and where the opportunities lie for you within your business about what you can focus on straight away. And the beauty of this is you're able to see where to not put your attention and where to put your attention so that the efforts you're putting into your business are actually in the right areas that are going to grow profit the fastest. And for me, when I'm working with any business, I take some of these numbers, I simplify them down into those handful of key numbers so that they can understand them really easily to start with. But then when we come and put those simplified numbers into this basic formula, and we do it with our tool, the profit calculator, we're always able to find exactly where the hidden profit is within the business. Where is the quick opportunity? Where is the one area we should focus on? And we can make some small gains relatively easily, which is going to translate straight away into increased profit growth. And it's not just accounting theory with income and expenses, we're actually able to go that layer deeper into the real world and relate that to you and your business and see exactly where the opportunities lie for you and how you can boost your profits straight away. Thanks for tuning into this episode of Profit and Cashflow Mastery. If this episode helped you gain clarity with your numbers, then please make sure you give us a 5-star review wherever you're listening to this. Don't forget to subscribe to our podcast. And if you want to stay connected, make sure you give us a follow on the socials at The Profit Analyst.